All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Wednesday, March 15th, 2023. Thank you so much for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time. Let's go ahead and get into it. Overnight, we had we are weak here on the S&P 500 and stocks because of Credit Suisse. This is the ticker CS. A Saudi investor stated publicly that he will not give any more money to Credit Suisse. And that's what continued to make the stock go down from $2.51 to 184. Credit Suisse has been falling now for a while. Don't have much details onto exactly why. There has been public statements from Credit Suisse themselves stating, Credit Suisse CEO, quote, "We are a strong bank and overshoot all regulatory requirements. Our liquidity base is strong." This is also from the CEO. "The material weaknesses referred to financial reporting controls have no impact on financial results." I went ahead and retweeted those headlines on Twitter so you can take a look at them. Again, I don't know exactly if this is an SVB situation, since Credit Suisse doesn't really have a big retail impact in the US. They're more an investment bank in the US, but they are a Swiss bank. So I can't really do the apples to apples comparison with a Sun Valley Bank, which is also a niche bank for VCs, venture capitalists. I know Bank of America reported a big increase in deposits, so did JP Morgan. So again, all you're getting is more concentration in the banks. It's kind of similar to what happened in 2008, post 2008, where the banks just got bigger and more consolidated as they ate up the competition. Whether it was Bear Stearns, whether it was Countrywide, whether it was Merrill Lynch going to B of A, all that stuff. That's just stuff that's been happening. That's happened before. So again, obviously, bank panics happen. We just had one. We are now in a new one with Credit Suisse. Markets are coming down. We're down about S&P right now is at about 75 points at 38.78. NASDAQ 12,156, down 1.45%. Dow down 623, 1.92%. Russell down 3.14%, 1738. Crude oil down 3.35%, 68.92. Now it's below 70. Now it gets interesting. So let's go ahead and take a look at crude oil. I really want to go over that with you guys. Crude oil, to me, crude oil is kind of the canary in the coal mine for inflation. The higher gas prices go, that means inflation is higher. You could see how high we got in July. That's exactly when inflation peaked, right around 123.25 a barrel. We are now at 68.96 a barrel. If you remember me speaking on the podcast and the YouTube many times, I said that crude oil has been kind of stuck in this range, but I don't like crude oil long term. I think we've actually hit peak oil. So you're going to get more of these energy companies to increase their dividend, burn more cash to do that. They just had their banner year, kind of like tech did in 2020 and 2021. I expect crude oil energy stocks to take a hit. In terms of support, you're looking at possibly 65, 67, and possibly even lower. Would I short this on crude oil? Not right now, because this has been so damn volatile. You could see just back and forth, back and forth, back and forth. Almost a quad bottom before we finally broke. So that's where we are currently on crude oil. I expect that to continue to go lower, even though the dollar is below 105. Crude oil not looking great, but that's where we are currently. So keeping it moving on the dollar. Dollar is at 104.76. We are here on the daily chart. Let me go and expand that for you. All right, so the dollar chart, you can see we're back above the 20. We closed below the 22 days in a row. We know that momentum indicator of the 20-day moving average. Let's see if we can hold below that 100-day, which we rejected back on the 8th and the 7th. That'll be right around 105.32, and you can see that's been kind of that resistance level around 106. We'll call it 106 as resistance for the dollar. So really, we're watching 105 and then see if the 100-day holds at 105.32 and then 106. We're not seeing the correlation, obviously, with a lower dollar and a better stock market, but again, it's something to look at. Let's go and take a look at 10-year Treasury yields. Again, they fall again, 3.455. That means TLT will be higher. I did expect government bonds to get bidded up. If you're interested in that video, I talk about government bonds on our top 10 stocks of 2023. That was TLT. Take a look at that on Instagram and on YouTube. It is free for everybody to take a look at. In terms of TNX, or the 10-year yield, we need to get below 33.77. That's your 50-day moving average. If that does break down, we'll see additional bond buying or momentum on the weekly chart for TNX. That's the weekly 50 MA. That's what we're looking for to break. At least it'll give some reprieve, at least in interest rates and mortgage rates. And let's see if real estate can at least help out. Since we really don't have a liquidity problem in the banking system, at least currently, you have just a niche bank issue so far. That could change. Let me just make that clear. I don't want you to say, I don't want to sit here and say, oh, that everything is all good, because we're not sure. But again, as of right now, we have SVB, which is a niche bank for VCs in Silicon Valley. Credit Suisse is going through some stock issues, but they say the liquidity is fine. I don't know what else he's supposed to say, the CEO. But again, that is an investment bank. When it starts getting to major commercial banks, I don't know if a Wells Fargo or any Citi or any of those names, JPM, Bank of America, all the big boys would have any issues with their deposit base. But again, that's something that's not discussed or even talked about yet, at least in Twitterland, Bloomberg, or CNBC. So again, I'll keep an eye if there's any changes in terms of the banks. We'll give you guys headlines as we go. But as of right now, it seems that Credit Suisse is the only name in focus. And really, that's the only name that matters right now, as even PPI beat. We'll go over PPI here in a second. Let's go ahead and get that info here. PPI. Let's see if I can load more tweets. Actually, you know what? I have it here. All right, here we go. This is a lot better. Let's go ahead and reload the Twitter, and then we can show the exact PPI number. All right, so PPI. See if I can do the tweets. Not just likes, but actual tweets. Here we go. That's the quotes from the Credit Suisse CEO. We are now pricing in, Fed swaps are pricing in 100 basis points of rate cuts by December 2023, expected from peak. Fed fund futures are now pricing in the first rate cut for July. And you can see Bitcoin is green to 24,951. There you go. In terms of PPI, let's go ahead and get the breakdown. So many tweets. Here we go. Core PPI month over month actual 0.0%. That's a forecast of 0.4%. Flat. PPI year over year 4.4%. Forecast is 5.2. A little bit of deflation possibly. Retail sales 0.4% in the negative versus the 0.4% estimate. February retail sales, excluding gas and auto, was flat, 0%. There was also another piece that I wanted to find on the 0.4 on the PPI. Here we go. Retail sales, that was retail sales. You can see 1.6% gain on online, health and personal care, groceries and electronics were all green. Materials, sports, clothing, hobby, music, clothes, cars, restaurant and bars, furniture and department stores were down. Better believe if restaurant and bars continue to go down, that's service. Everything else is, you could see, is really just goods. But really right here, restaurant and bars, if we really see the retail sales fall a little more, expect non-farm payrolls to fall. So the question now is the Fed going to get in front of this? Are they going to start seeing that this is enough in terms of deflation? Now you're starting to break things. Are they going to pause? We'll see. We'll see next week with their FOMC. The implied move is now 25 basis points, but there's a chance of a pause. If you've been following us now since December, I said that we get a February rate hike and pause. I may not have been right, but I'm not wrong on that end. So we'll see. Good morning. Good morning. Largest shareholder of Credit Suisse. Yep, can provide financial support. Yep, 578 billion. That was the a Saudi Arabian prince, I want to say, or a businessman that said that, and that's what caused Credit Suisse to fall. Back to the markets, I also wanted to go over a couple of things from yesterday. I really didn't go around the horn because I really wanted to go over what was important of the day. So let's go ahead and take a look at this here. We played AMD yesterday. Let's go ahead and zoom it in. Nice pop on Tuesday. We targeted that 88 level. We got out. Excellent work. AMD is actually not terrible, if I could be honest. AMD is actually holding up rather nicely, retesting that 85 level. That was the breakout level we were looking for. Again, could be a way to play a bounce here back to 88 on AMD. Why not? I'll keep an eye on it today and see if we can get a re-entry. QQQ, that was a win yesterday. QQQ, I opened this yesterday with the team and I broke it down and we were really close, guys. 298.31 is the level that we were looking for. We actually broke it this morning. And guess what happened? We faded. Very similar to some price action we had a couple of weeks ago with QQQ puts, where it actually hit. We were really close. It was actually in the money. Not this one, though. And then we fell. So again, this is the problem with options sometimes, guys. You don't have control of options overnight. If you're the type of person that wants to have control all the time in terms of your positions, you want to have futures. Futures are your best friend on that end. I went ahead and drew this here, and you could see that we've been kind of stuck in this little range here with a couple of overshoots and a couple of undershoots, and we finally broke out of it yesterday. We retested. I expected us to get to 4,000 yesterday and then tank back to 3,900. We didn't get that. We got to 3,970. We rejected and got to 3,900. We got back to 3,953 at close. So very choppy action on ES, but again, we're watching it very, very closely. We're at the top point of this range here. I still have those QQQ calls for Friday. So again, I'm going to hold them. I want to see how we do this morning. If we start retesting 292, our premiums might be hit anyways. So again, I'll be watching very carefully on that. Here's a couple of charts I want to show you, a couple of things that are funny. Anyone here a big AI fan? Stock chart, crash alert. ChatGPT says stocks will tank on March 15th. If this is enough a tank for you, then ChatGPT was right so far. But I don't know if that's a lucky guess or they knew. Here we go. Past 2 decades, stocks tend to bottom in March. You could see it here. Seasonality. This is the script we've been following now for February and January. And it worked out so well. So again, we'll see if we get this bounce off the lows. This is the past 20 years. Right in mid-March is where we bottom. If you remember in 2020, it was very similar. How about this? Late March has been better for stocks lately. S&P 500 March returns for the past 2 years. You could see ugly 15th through the 16th, and then right in the 16th, we get a nice pop, and then we start moving a little higher. So just this is based on seasonality and historic data. We'll see what we get moving forward. Is this the most of the day? Do we rally or kind of end up green or maybe less down for the rest of the day? That remains to be seen. Let's take a look at S&P 500 to keep an eye. And S&P 500, not including today, from where we closed, we were above the 200-day and above the 100-day. Very, very solid. And then we came down today. This is all Credit Suisse and all those fears. But PPI came in exactly what the market wanted. I want to see if the market runs with it. We're now above the market lows this morning, right around 38.65. We're at 38.80. 39.90 seems to be a very key gamma spot that I've been reading too. 3,900. If you notice, we've been retesting that level and kind of consolidating around 3,900. The longer we stay high above 3,800, the better, guys. We want to stay as close as we can to 3,900 to stay on the right side of 4,200, not on the wrong side of 3,500. Why do I say that? Let's do this. Anyone here that's a Fibonacci fan? We can go from the top point of this range here of right around 42.08 to the bottom end of the October lows. Let's see if I can get this here. Let's call it 30 right there. We'll call it right there. The 50% retracement right here is 38.50. But that 3,900 is right near the 61.8. So I drew the fib levels to kind of give you an expansion or a kind of a zone setup. And again, kind of very similar to this green chart here that I have here. This is kind of a little bit of a range. And again, you can see how we consolidated here. In December, we had a shot to get lower to below 3,800. We consolidated in December, and then we rose. The longer we consolidate at 3,900, the risk is to the upside, guys. Now you have seasonality in mind. Again, I have no problem shorting. The problem is that it gets very expensive. You're starting to pay really good money for those put options, and they go against you. It's really going to hurt. So right now, you're really playing reversals. Like I wanted to do yesterday was to get us to around that 4,000 level. That was the 20-day moving average, and I wanted to short there because I know puts would be a lot cheaper. Now, calls are going to be cheaper because we're sinking. So we'll keep an eye and see if there's any reversals that we can play. Maybe we get back to 39.50 with that 200-day. That's a target I'll be looking for if we break above 3,900. 39.50, guess what? You're probably shorting there to get back to around this level here, 3,800. All we're looking for is that range to get tighter. I wouldn't want to trade as it gets tightened, but again, I wouldn't be surprised if we get that leg higher to 4,000. And then 4,000 is going to be another key area because that's going to be Fed influenced. If we get to 4,000, let's say by OPEX on Friday. Next week is the Fed. So again, more than likely, no one knows what's going to happen in terms of either a pause 25 or a 50. I would assume that we get to 4,000 and would probably reject there, as there will not be enough juice or enough confidence to get you above buyer confidence to get you for 40, 50, which is that mid-February support. So again, guys, a lot of chop. That's really what you're getting. A lot of consolidation. I do have those Qs. We did catch AMD yesterday. Luckily, not a ton of risk on Qs, thankfully. That's all we had open. So again, we're bouncing a little bit. A little patience on this one. Keep an eye on AMD. If AMD starts to move, if it starts getting above 86.50, maybe 86.75, the 88 calls are not terrible, but you'd have to be very nimble to get out of it same day. So again, that's kind of the level I'm looking for. If you want to confirm the move, 87.31 would do it, but then you'd have to go to possibly the 90 calls or the 89 calls to get a little more out the money, so you can squeeze those. You can squeeze a little more points, but 86.48 would open my eyes to take a look at the 88 calls on AMD. But again, we're looking for reversals. All the move was done this morning already. If we continue, fine. We'll see what we can do. But if anything, we want to see if we get some kind of movement to the upside, maybe back to 3,900 and kind of hold around there, maybe 3,950 if we're lucky. But again, we need to retrace all this move. And again, we'll see what we get. PPI did its job. That I know that for a fact. But Credit Suisse, not making a lot of friends in the market. QQQ close, but no cigar. Any chance it recovers with all that happening? Yes, there is a chance. And of course I say that because if we get a reversal to 39.50, you're back to the same place we closed yesterday. So again, that's really what we're looking for, is to see if we get a retrace on the S&P 500 and Qs. We were at 298.20 yesterday, 298.30 or 298.30, excuse me. See that alert that we broke above it overnight, and then Credit Suisse hit. If we would have opened this morning at 298.31, Qs is green, and we're home, and we got that. We're 2 for 2 for the week. Unfortunately, it happens this way. We had a nice bounce off this same range that I went ahead and posted yesterday on the watch list and charts on Discord. So again, I like to give the updates on the trade as we go. Unless there's nothing happening, then I really don't send anything. But again, I want to walk with you guys to show you exactly how the charts are reacting, price action is reacting when we're in a trade. So again, we're still right at that top of that channel. I say we bounce on Qs, but again, if we start breaking below 292, then the trade's more than likely invalidated. That would really suck because we could have just stayed with AMD being 1 for 1. But we're seeing some a little bit of relative strength in AMD compared to the market. So at least that's a good sign. Best case scenario for the bears out there, really need my puts to print. Best case scenario for the bears, you need to break 38.50 today. That's what, well, not today, but you need to break 38.50. And again, the reason I say that is now you're starting to get a little bit of higher lows here. Look at this. Let's go ahead and do the drawings. And again, buying puts here is so difficult because they're so damn expensive. And that's the hardest part. And you can see here that we're getting a little bit higher lows. In terms of higher highs, we're just not there. But I'll draw the red line here and you can see it. Nice bounce so far. Really need to hold 38.50. That seems to be that key support that we held from Friday. And 39.50. That's right here. That was that 200-day moving average on the daily. But again, 3,900 being a key gamma level. We'll see if that holds as a magnet moving forward. But we're starting to see a little bit of a peak on Qs. We'll see what we get from there. But yeah, Young Danny, if you have puts here, keep an eye if you get above 3,900, because then you'll probably get a little higher. But we'll see where we go from there. Right now, again, kind of no man's land. Hard to make a decision here. I'm just going to be watching very carefully. AMD is starting to creep up a little bit. Let me see how NVIDIA is looking before we close up the session. And you can see NVIDIA, not much going on. But AMD is a little better trade. Tesla I was watching yesterday. Now, this one is interesting. I want to go over Tesla. Here's going to be 2 of them. Tesla on the 1 hour, you're right at the 100-day. Fine. Let's see, 179.30. Yep, you're at 179.30. You got to hold the 100-day on the daily. My target would be 195. I was looking at those calls yesterday. They were trading right around $1.10. I did not fill them with the team because I already had QQQ exposure. So if Tesla did hit, Qs would hit anyways. If we hold right here, 175.75. Again, that's $4 away. If this can go green for the day, maybe get back to around 183. I'm going to keep an eye on those 195 calls, guys. 195 calls, again, just targeting the 20-day for a nice little snapback rally. Again, that's we get those oversold rallies like we had yesterday. No difference. And you can see we're right at 61.8 fib, which is very, very close to that 100-day. Tesla and AMD are on my watch list. If you noticed that mega cap tech has been outperforming, Mizuno put out a note that mega cap tech is showing all the inflows. Maybe that's safety for people, companies that actually make money. Banks make money too, but again, banking is based on confidence. Mega cap tech is more innovative. Banks are more service and just creation of money. But if you look at tech companies, they actually make something of value. And I think a lot of investors, if banking tends to take a hit, I think that'll probably be the rotation out, if not into Treasury bonds, just to go ahead and make the yield at that point. But mega cap tech, yes, profitability has fallen, revenue has fallen, but again, pretty safe in terms of their balance sheets for the most part, at least for the main guys, the Microsofts, the Apples, and the Alphabets of the world. But again, that's for another conversation. Okay, guys, we'll leave it there. Here's a question here from JJ. Thoughts on Apple? 152.5 calls. This is for next week, he states. You have a 152.5. So you're now at 151. Let's take a look at the price action. Very, very choppy. And again, this is kind of something that I've been looking at in terms of the S&P. Really, Apple, the price action on Apple has been pretty choppy, but pretty strong in terms relative basis. So again, as long as Apple kind of holds up together, when Apple is down, that's when you have to worry about the market, in my opinion. That's when I start to worry, because that's a big retail holding. That's my largest holding. So I can imagine that if people really start losing confidence in a company like Apple, remember, they didn't beat their earnings last quarter either, then that's where you start getting a little more cascading effect of fear. But you can look at Apple here, 152.5 calls for next week. I don't see any reason why you want to close it here. Really your invalidation level, to my opinion, would probably be 147.5. But I think you're going to probably get to 153 if you get into the top end of this range. And then if you get there, I'd take it. I'd probably take it by the end of the week before the Fed. JJ. All right, guys, I know we went through a lot. We talked about a lot. Yesterday's video was a little short, but a pretty good day. We'll see what we get today for the whole setup. I mean, really, we're starting to bounce here a little bit. I'm pretty consistent, guys, if you know me. Up or down, left or right. I've seen pretty much everything other than the Great Depression at this point. And the 87 crash, I was 2 years old. But again, pretty much have read most about, and human beings and human nature doesn't change. Let's just keep that setup in place. No matter what, human nature and human emotion never changes. There's always greed versus fear. What side are you on? At this point, all you're doing is watching, and you're doing it very, very tactically. All you're doing is watching, and you're doing it tactically. I just want to repeat that, because right now you can go either way. I lean to the long side. If we would have opened at 4,000 today, I would have said I'm shorting. But since they want to flip the script on me, again, we want to play reversals. You're seeing higher lows, at least in terms of the hourly wicks. I expect us to get to 3,900 by today. I don't know where we close, but 3,900 should hit, and we should pretty much just hang around that area. AMD is starting to move higher now. Again, we'll see what we get with that, but man, that doesn't look terrible. I'll tell you that much. Thoughts on Bitcoin retracing to 19 to 20K. I actually posted a chart on Bitcoin. Not a chart, I posted a headline on Bitcoin. And Bitcoin is, again, remember that level I was talking about? 25,000, that's what we want. I actually see us getting back to 28,545. There is a gap to fill here, guys, on the contracts futures. You can see it right here, right around 28,698. If we start breaking above 28,698 and fill that gap, you kind of want to wait and see what happens. Because if we get that gap fill, we may fall back a little bit, retest 25. If we retest 25 and hold it, that'll be a very good green signal. Other reason too, golden cross, 50-day above the 200-day. So I'd expect us to get to 28. That's great. You're probably selling into that if you need money. And then you get back to 25, retest that new support that was resistance. If you remember the 25,000 level, if we can hold 25,000 again, we're going to go higher with the golden cross. So again, I am bullish on Bitcoin. But again, up to 28,422. Have a great rest of your morning, and I will see you guys tomorrow for the morning note. Have a great day, Alex. Thank you. Thank you, JJ. Thank you all. Have a good day, guys.